What happens when the money in your wallet is no longer backed by a government, but by math that no one can change? Imagine waking up on January 1st, 2030. You check your phone, but instead of looking at your bank balance, you check Bitcoin, the world's new benchmark for value. Is one Bitcoin worth $1 million? $10 million? Or did the greatest financial experiment in history collapse to zero? For years, Wall Street dismissed Bitcoin as a speculative gamble. But as we move toward 2030, that narrative has changed. The Wild West is becoming institutional finance. The next few years will determine whether Bitcoin becomes a permanent part of the global financial system or remains just another failed experiment.
To understand Bitcoin's future, we first need to look at the current financial system. Governments continue piling on debt at an unsustainable pace. Paying it back through taxes and economic growth alone is becoming increasingly difficult, leaving inflation as one of the major tools used to reduce the real value of debt. That means cash slowly loses purchasing power over time. Bitcoin was designed differently. Its supply is fixed at 21 million coins. Unlike gold, real estate, or company shares, more Bitcoin cannot be created just because demand rises. By 2030, another halving will reduce new supply even further. If demand keeps increasing while supply becomes scarcer, prices could rise significantly.
The biggest shift is happening with institutions. Years ago, many major financial firms criticized Bitcoin. Today, they offer investment products built around it. Spot ETFs open the door for pensions, corporations, and wealth managers to gain exposure. By 2030, Bitcoin could become a normal allocation inside retirement accounts and corporate portfolios rather than a niche investment. Beyond Wall Street, governments are also paying attention. As countries search for alternatives to the traditional dollar-based financial system, some see Bitcoin as a politically neutral reserve asset. Smaller nations are already exploring mining with renewable or excess energy. If larger economies begin building strategic Bitcoin reserves, competition for a limited supply could intensify.
Critics often argue Bitcoin is too slow for everyday payments, but modern financial systems already operate in layers. By 2030, technologies like the Lightning Network and other scaling solutions could make Bitcoin payments nearly instant, while the main blockchain remains the secure settlement layer. Artificial intelligence may also play a role. AI systems don't use traditional bank accounts, but they can transact digitally around the clock. A decentralized digital currency could become useful for machine-to-machine payments in a growing automated economy.
The road ahead won't be smooth. Governments are developing central bank digital currencies, CBDCs, which differ significantly from decentralized cryptocurrencies. Supporters see CBDCs as more efficient payment systems, while critics worry they could increase financial surveillance and control. This debate over privacy and monetary freedom is likely to continue through 2030. So where could Bitcoin be by then? In a conservative scenario, it becomes a mainstream institutional asset, potentially reaching $250,000 to $500,000 per coin in today's purchasing power. In a stronger adoption scenario, where institutions and multiple governments embrace it, some analysts project prices between $1 million and $2.5 million per Bitcoin. Of course, there's also the downside. A critical technical flaw, severe regulatory actions, or a major collapse in confidence could dramatically reduce its value. Like any investment, Bitcoin carries real risks. Ultimately, 2030 may not just be about Bitcoin's price. It could reveal whether the world continues relying primarily on government-issued money, embraces decentralized digital assets, or settles somewhere in between. Whatever happens, the coming years will shape the future of money more than any period in recent history. If you enjoyed this series, hit like, subscribe, and turn on notifications so you don't miss future deep dives. And before you leave, tell us in the comments, what's your Bitcoin price prediction?